Right now, we're in unprecedented time. There's war that is going on. There's inflation, and then the fiscal policy that is going to be following the inflation is going to be driving our economy down to depression. So during this period of time, do you still want to hold majority of holding in the stock? Most Americans are invested in general stock. That's when they have cash, they don't have anywhere else to put it. They can either put it in the bank and watch it dwindling down on the purchase power, or they can invest into, I guess, the only thing come to mind is stock. Here's a couple of reasons that we summarized that you should not be investing in stock, or at least put 100% of your portfolio in there. First, stock is hard to predict. And that was the reason why majority of my holding is in real estate, not in stock. It is really hard to predict. With real estate, you can kind of see the train wreck coming or the train going. You can see the economy cycle with a little bit more foresight. Versus stock, it can happen in one night. Second is the tax consequences for stock. You have to hold it for an entire year for it to be a capital gain. And stock goes up and down all the time. If you're not in control, you can exit anytime you want to because there are tax impacts. That limits your ability a lot more. And then if you did do buy and sell, that is day trading, that you are going to be taxed a big ordinary income tax. For most people, that is between 20 to 30% bracket. Third, of course, you're not in control. The company does what the company does. One earning can make the stock crashes, or a simple thing like what we observed in the last couple of years, like GameStop, that stock went up and down. It's pure manipulation from the public opinions. And lastly, in the current event of wars and inflation, we're just kind of seeing more of a bear market moving forward with the stock. We want to kind of get out there, diversify a little bit out of that, and then essentially invest into other more stable assets instead of putting all the money in the stock. So our suggestions to fix this issue of concentrated stock is a diversification into different kind of assets. We have information on gold. How do you buy precious gold? Real estate investing, both holding some assets for yourself as well as passive invested and diversify into other portfolios. These are things that we suggest, and we have tons and tons of information on our website down below. Two is perhaps buying some more index fund to diversify between all different portfolio instead of concentrated one or two stocks. And because when you invest in one or two stock, your risk a lot higher, and then you're going to be risking exposure. So the loss and gain is going to be a lot more volatile. We love Vanguard index funds, and there's multiple of these. The Vanguard Total Index Fund is one of our favorite over there. So then you just set and forget in the buy and hold mode. Third is to invest in TIPS. TIPS are Treasury inflation protected security, which is this bond that the government gives to you, hedges against the inflation, protect you against the inflation. So that's something to kind of look into as well. If you like what we do, please like our video here, subscribe to our channel, and share it with your family and friends.